Hey everyone, welcome back to the channel. Today let's talk about a big news we have for Alibaba Group, the stepping down of the ex-CEO Daniel Zhang. Alright, in this video we're gonna dive into the reasons behind his surprise departure and explore the investment merits and risks of Alibaba stock as well. So let's jump right in. First of all, let's look at the background of Daniel Zhang and his role in Alibaba. He joined Alibaba in 2007 as the CFO of Taobao and became the president of Tmall, where he helped to launch the Singles Day shopping festival, which has become the world's largest online sales event. In 2015, he succeeded Jack Ma as the CEO of Alibaba Group, and in 2019, he also took over as the chairman of the board. In other words, Daniel Zhang is widely regarded as a visionary leader because Alibaba has become one of the most valuable companies in the world under his leadership. However, in June 2023, okay, just recently, Alibaba announced that Eddie Wu will assume the position of the group CEO while Zhou Xie will become chairman. All right, effective 10th of September 2023. The plan was for Daniel Zhang to continue as the head of the cloud computing division, Ali Cloud. This is what I would call a demotion lah, because since he was previously CEO and he was now uh, demoted to the head of the cloud computing division only. Alright, so on the ground, we can see a dual impact from Daniel Zhang's surprise exit. First one is that Ali Cloud IPO will likely be delayed, although Alibaba says that it will be still on the table. Second, there are definitely concerns, all right, in the investment community with these frequent leadership changes. For example, Chesley Tam, a senior equity analyst for Morningstar, thinks that this latest change was not planned back in June, and this could raise concerns for corporate governance or some maybe hidden disagreements among the Alibaba's partners. Zhang Xiaorong, a director of the research institute Sentu Technology, also said that Alibaba Cloud has experienced frequent personnel changes, which may have a certain impact on the strategic direction and the overall valuation. Despite the big departure news, Alibaba Group is still a conglomerate with many investment merits. First of all, Alibaba still has a dominant position in China's e-commerce market, one of the largest markets in the world. According to Statista, China's retail e-commerce sales are expected to reach 4 trillion by 2026, accounting for over half of the world's market share. Alibaba also has a diversified portfolio of e-commerce platforms that cater to different consumer markets, such as Tmall, Taobao, AliExpress, Lazada, and more. Alright, before we move on to the other investment merits, do help us to subscribe to the button and give us a thumbs up for this video. As usual, I will show you a financial meme. Secondly, Alibaba has a strong competitive advantage in terms of the technology, the data, and the ecosystem. If you want to zoom into just one thing, I would say that it is the powerful ecosystem that connects the various businesses and platforms. You have things like Alipay, Cainiao Network, Youku, Elimi, and more. Alright, so this huge network effect cannot be easily replicated for sure. Third, Alibaba has huge growth potential in the cloud computing business, which is the largest and fastest growing cloud providers in China. All right, according to Canalys, all right, Alibaba Cloud has a leading 34% market share in China's cloud infrastructure market in first quarter 2023. So Alibaba Cloud is also expanding the presence in overseas markets such as Southeast Asia, Europe, and the Middle East. So in particular, I also see Ali Cloud coming into Singapore, and I do see that they are constantly hiring, recruiting more people. And as ChatGPT sets off a new wave of the generative AI, this is expected to unlock new growth opportunities in the cloud service market. Okay, last but not least, Alibaba also has a relatively attractive valuation compared to the e-commerce peers and its own historical averages. As of 12th of September 2023, Alibaba is trading at around $88 and a trailing price to sales ratio of 1.8 times. This is cheaper compared to the major e-commerce markets like Amazon of 2.7 times and Mercado Libre of 5.9 times and Pinduoduo of 5.5 times. It is also lower compared to the Alibaba's own 5-year average price to sales ratio of around 2 to 3 times. On the negative side, there are also several risks that you should be aware of. Alright, the first thing is the constant regulatory overhang from the Chinese government. Right, they are always sitting there and looking at you like a watchdog, right? And this can limit the growth potentials and profitability. It acts like a stranglehold to any big tech company in China and even foreign companies, right? So things can turn south in a matter of days. And all these are preventing other foreign companies, especially US companies, to invest in China due to the political uncertainty. Next, okay, this also links to the ongoing geopolitical tension between China and US. For example, after the recent Huawei 5G chip debut, US lawmakers called for tighter export controls, especially in the semiconductor chip industry. China, in turn, because they are a big consumer market, right? They plan substantial iPhone usage bans for government bodies and state-owned firms. Okay, so with that in mind, many big fund managers that I know of are already pulling out of China stocks, and they are likely to continue waiting on the sidelines to see if things improve in future or not. Okay, and on top of that, right, Alibaba also faces competition from other tech companies as well. Some examples, right? Tencent investing in social commerce platforms like Pinduoduo and Meituan Dianping, right, which have gained popularity among the lower tier cities and the rural areas. ByteDance, TikTok, right, also launched their own e-commerce business and challenging Alibaba's dominance in the online advertising space. Last but not least, new entrants like JD.com, Kuaishou, and Shen have also captured significant market share in the various segments of e-commerce. Okay, to wrap things up, Alibaba stock prices declined by 3% after the announcement of Daniel Zhang's surprise exit. So it may suggest that nobody was extremely concerned about this move. On the other hand, Alibaba Group still looks kind of attractive from a fundamental and qualitative analysis point of view. Okay, you talk about the economic modes, you talk about the valuations and things like that. All right. So, however, if we were to also look at the constant control and influence of the China CCP, it kind of overrides everything that what Alibaba stands for, because that's what most investors can't get their heads around of. In my opinion, although Alibaba stock is a fundamentally sound one, we believe that as investors, we are not just limited to Alibaba stock only, and there may be or there will be many better opportunities out there as well. All right, to know the stock that I'm thinking of swapping Alibaba to buy next, okay, remember to subscribe to my channel and ring the bell to be notified when my video comes out. Next up, don't forget to check out this video over here on the 5 undervalued tech stocks you need to know. And I will see you next time. Thanks for watching and bye.